everyone. Welcome to the market update here for Tuesday, January the 3rd, first market update of the new year. Hope everyone had a happy and fun holiday season, and then now it's kind of back to work. Unfortunately, it looks like, at least the way I'm reading the charts, that it could be a little bit of a brutal beginning to the new year. We'll take a look at that here in just a second. Before I get started, though, if you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to jerry@traderspro.com. I'll be happy to answer those for you. And that would include anyone watching the recording of this class. If you can't attend the live class, you're watching the recording. If you have questions that come up, make sure you send those questions to me. I'll be happy to answer those for you. All right. Obviously, we're still in a bear market. What I keep focusing on, and still what's concerning me, is this big divergence in momentum, breadth, and sentiment. You know, momentum is we're kind of in the sell area right here. We moved up a little bit when the market. The market was basically flat into the end of the year, and so a lot of these aren't much different from the last Thursday's class. Breadth is just kind of in the middle, trending, and sentiment, again, it's just highly complacent. I want to come back to this chart right here just to show you how extreme that divergence is. You've got sentiment all the way up here, you've got breadth here, and you've got momentum down here. Now, sentiment usually lags on the way down, and you can see that here. It's as breadth and momentum drop, sentiment kind of lagged, and that last drop back in October. But I mean, this is really lagging. I mean, this is we're already down here on momentum and breadth. Sentiment is just still way high. Again, there's two ways to look at that. You can look at that as the market doesn't think that these problems coming up are going to be that big of a deal, that there's going to be a soft landing and we're going to go forward, and so there's no reason to be fearful or to worry or to be concerned. Or you take the approach like I am, because it matches up better with what the chart behavior is, which is the market is not pricing in what's coming. It's not worried. It's going to get worried, not showing the worry yet, but it's going to start showing up. And now, again, it's very important. We say it all the time, but we have to understand that we can never know exactly what the market is going to do. There are a lot of people that are bearish on the market, and part of me worries a little bit about that, because here you got a lot of people that are bearish on the market, but that's not showing up in the sentiment readings, some of the sentiment readings, and so could it be that you get a rally here that shifts everyone back to being bullish again, or gets people chasing, and then you get a bigger decline later? That's always something that can take place. The point I'm trying to make is I'm not trying to be Nostradamus here. I'm not suggesting that I know exactly what the market's going to do. I'm just telling you the behavior right now is really looking more towards this scenario where we start to see some panic selling taking place, or at least some fearful selling. We haven't even seen fearful selling yet, but I think we'll start to see that. And it looks like it should likely happen early in this month, in this new year. Now, today, the market tried to open higher, reverse. We'll take a look at the chart here in just a second. But usually with that type of reversal, you might expect that there'd be some heavy selling that starts coming in. But we came off the lows of the day. It'll be really interesting to see how we close today. I think that's really what I'm kind of waiting for. When we start this class, it's kind of the coming out of the lunch period. I talk about this all the time. In the middle of the day, you don't really want to be doing a whole lot or making a lot of major decisions. because most of the professional traders are out to lunch, or at least taking lunch break or whatever they're doing. They're not usually doing heavy trading during that period of time, unless there's a significant event going on that's causing them to buy or sell. And so what'll be a better read on at least today's price action will be in the next couple hours here, how we kind of close the day, particularly that last hour, to see how things kind of end up closing. And when I get to the charts here, I'll show you some different possibilities. Because although I'm pretty bearish and expecting this bigger move down, there is some room on the chart to get a little bit of a short-term rally, and so we don't want to throw out that possibility, because if it does, we also don't want to panic and just start immediately buying into what could be just a sucker's rally. It'd be more, to me, it'd be more of a signal to be patient, to kind of wait. Now, I'm not going to have just a heads up for those of you who are just attending the class for stock picks today. I'm really not going to recommend any individual stocks. Well, we may talk about a couple that I think will be fine for the longer term. I will talk about maybe using some inverse ETFs that you could profit if the market drops. But this is a period where I'm not, when you're in down markets, it doesn't mean that you can't find pockets that rally. We've done that for most of the last year. We found some good trades in energy. We found some good trades in some of the aerospace defense stocks. There are pockets that you can find, but when you're expecting a more severe sell-off, a panic type sell-off, or at least a fearful sell-off, those moments, almost everything starts to go down. It doesn't matter where they've been trending before, or how well they've been doing, or what they're, how well they're earning, how good their earnings are, or anything like that. It will drop with it when you get into those panics. People just sell first, and then they'll reevaluate later on. And so, in this type of environment where I don't know when that might start, and who knows, maybe it won't. But you definitely don't want to get your head chopped off just buying heavily into a condition where you could get this bigger sell, because you see how fast markets fall. They can fall very, very quickly. And if you think you're going to have a big, strong clue to get out ahead of time, you're not always given that. And probably one of the biggest mistakes that people make is they overtrade in bear markets. They try to pick the bottom, or assume they pick the bottom, or they're close enough to the bottom, and they end up usually losing enough money to where they spend the first half of the bull market just trying to make up what they lost over trading in the bear market. And so I know I've been asking a lot for everyone that keeps attending each week to just be patient, and to just I try to give you some ideas of things you can do if you don't want to just sit in cash and do nothing. But hopefully what you're learning, hopefully the most important thing I'm teaching you in bear markets is just try to be patient. Try to do something, but not do too much to where you damage your account. And if you look at the portfolio, all we're trying to do is grind out some gains. We're not worried about big gains yet, but if we can make $1,000 every week or two or whatever, I'm more than happy with that result while I'm waiting for the market to bottom, because that is where we're really going to make the big returns. Now, again, I'm not suggesting also that we're going to know exactly where that bottom is, but as I keep pointing out, talking about, and I will keep repeating as I get new people that join, there are certain conditions that usually precede a bottom, namely a panic type sell-off that we just haven't seen yet, and that would just be the first clue, and then we'll work on looking at just the chart reversal. Do we start reversing into an uptrend and things like that? We can start addressing some of that stuff when we get some of these some of these events taking place that will tell us that we're a little bit closer to a bottom. All right. Buy sell ratios, again, moving a little bit closer together with some of the recent rally in the market. But we're kind of wide, but not too extreme. So going back to the other alerts as well, let me go back to, so momentum again, not an extreme risk. It's not oversold, extremely oversold. Now it may move a little bit more towards that when it updates overnight, with depending on how much we sell off today, or if we sell off, maybe we rally into the close. Who knows? Obviously, breadth isn't in that in any sort of extreme area. Sentiment is, but it's been there for a long period of time. Buy sell ratios a little bit wide, but not too extreme. Could they become more oversold? Yeah, in fact, I would expect them to if we start getting a much bigger sellout taking place. And then this other sentiment indicator off the oversold area there, but wouldn't take much to get down to that green line if things started to turn lower in any significant way. So it could be that if we do sell off in the next couple of days, that Thursday we start to see some more extreme areas that where we might maybe expect a bounce, or where we could see a possible bounce. But as I'll show you when we get to the charts here, let's go to the charts. I think that we'd probably see some more really extreme oversold conditions before we start to bounce significantly. So here's the S&P 500, the SPY. Obviously, you can see that we tried to open higher today, tried to rally up, and then now we're down here, but we're off the lows of the day. One thing that we want to pay attention to, I always teach, is look at the range of the previous day. Here was the high of Friday. Here was the low range of Friday. We did barely get down below, outside of that low range from Friday. We did rally off of it though. If we close where we're at right now, we basically closed inside of that price action from Friday, which will be kind of a neutral short-term bias. Obviously, the candle would still be bearish because we closed lower than we opened. We try to gap up. We opened higher but closed lower than where we opened. But we'd like to, for a bearish sentiment or a little bit more of a bearish bias on the market, I'd like to see us close below that low point of Friday's range there. That would give a stronger indication that we could start to move lower. Obviously, we've been moving sideways for the last couple of weeks. Previous move was down. When this sideways move is done, and again, the key is when it's done. We don't know when it's going to be done. It could drag out for who knows how long. We should see the next move should be lower based off of momentum. Typically, that whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. However, in the near term, because we haven't broken out of that sideways range yet, there's still a chance that we could, it could be this is kind of wave A, wave B, and maybe wave C puts us up here a little bit higher. That's why it didn't shock me that we kind of opened higher this morning, because when I was looking at this from Friday's close, there was still that potential we could move up here a little bit higher. Now there is that resistance up here around 389. I've been talking about for a while. I don't think that we get above. I don't think there's enough buying strength in the market right now to get above that level. If we do, that would it still wouldn't take away the potential to drop, but it would concern me a little bit in the near term, because I'm just not expecting it to get above there. But keep in mind too that this is where the game really gets interesting when you're trading. It can be kind of maddening sometimes when you could start to overthink stuff. So this is where you have to be careful not to get too complex, not to overthink things and make things more difficult than they need to be. But there's a lot of people that are looking at this area, whether they are looking at exactly 389 I'm not looking at exactly 389. I'm looking at this area or zone. There's a kind of a, there's a little bit of support up a little bit higher. There's this support resistance down here. This zone right here is kind of a resistance zone. If you want to just kind of there's a big wall right here. If we break above that wall, that would tend to be more bullish. As long as we're, still within this wall, there's still that potential to get that decline down. But the point I'm trying to make is that, and I try to bring this up as much as possible so you understand that I'm no one special. I'm seeing what anyone knows how to read a chart and knows how to read trend lines and is been trained to do so, is seeing the same stuff that I'm seeing. So, this is not, top secret information I'm giving you. There's a lot of people that are seeing these same areas and are reacting to these same areas. There are computer programs that are designed to trigger at some of these areas as well. So, could it be that the traders bring the market up outside of that range to try to draw some buyers in, so they can then crush it back down, bring it back down again? Yeah, those kind of games can take place. And so if we did break out of this range right here, it would be, you'd have to kind of force yourself to turn a little bit more bullish at that point, but I'd still be very suspicious about, at least in the initial stages there, whether that's going to hold or whether it's going to keep moving higher. I'd be interested to see if there's any sort of bearish reversal candle that would form in that area there that would indicate that there's no more of that buying momentum that's going to reverse and go back down. Doesn't have to do that, and it doesn't even have to get up any higher than where it's at. We could drop straight from here. But see, that's the point I'm saying. In the near term, I can't tell based on the candles or the charts what can happen tomorrow or Thursday, or even the next couple of days. There's nothing that's saying there's a strong probability we're going to go down. For instance, we had this big bearish reversal candle on that day. There's a very high probability we're going down. Okay, I'm very confident we're going down after that. Not that always happens, but there's a very good chance that we're going to go down. We did. Too much indecision right here. In fact, that's reflected by the fact it's been moving sideways. It's showing indecision. There's no clear direction there. So if you're telling me you know exactly where the market is going to go tomorrow, then I would strongly argue with you that that's not showing up in either the price action or the chart, and you might want to explain to me what your reasoning for it is, because I wouldn't be able to really buy into that confidence in the short term. Okay, now longer term again. So we can't really tell shorter term what's likely to happen, but longer term, like I said, whenever this sideways move ends, the next move should be down. Now, there are some things happening this week that if you're looking for possible triggers, well, to be honest with you, I haven't really looked into every possible trigger, but I do know that Friday is a jobs report. Every first Friday in a new month is the jobs report. It's something the Fed's been watching. And remember, the Fed wants to see unemployment go up. They want to see the economy slowing down, they want to go into recession to deal with this inflation problem. That's going to be something that I know a lot of the market's going to be focused on. We don't have a Fed meeting in January. It'll be the first, I think it's that first week in February. So there isn't going to be that to trigger. There will be a CPI report that comes out. I have to look at when the date of that is. Normally, by the way, this stuff I don't pay attention to. I'm not a fundamental trader. I could not tell you whether a CPI report reading was good or bad. I don't care. I just care what the market is telling me if it's good or bad. So what the chart does, what the movement of the market is. But the reason why I've been pointing out some of these dates lately is that they've been triggers for moves, and the market is paying attention to it. It's reacting to it. And in some cases, the market isn't doing anything. It's moving sideways until it gets some of these these binary reports. Binary meaning it could go either way. And it's really kind of frustrating in these type of market conditions sometimes when you get a lot of these binary events, because you feel like it's a coin flip sometimes. You're trying to guess which way the market is going to react. However, as I pointed out before, with some of these other, here was that CPI report that came out here that looked supposedly so great, when the market didn't do anything. It moved up barely a little bit higher. Remember, this was a CPI report that came out. We didn't really go anywhere. We moved sideways. This was the Chairman Powell speech where the market apparently liked it, but then what happened? It dropped right after that. Here was the other CPI report right here, opened higher right here, supposedly very bullish, and then we dropped off of that. So, we've had some of these binary events, and initially they've made a move in a certain direction, but where are the buyers? Where are the people aggressively buying that information? We're not seeing, in fact, we're seeing the opposite now, where we got impulsive down, corrective. We should see another impulsive move down off of that. Now, the other indexes are pretty much showing the same thing. The Dow, I thought was interesting with the Dow, as I went through last week, I went through and looked at a lot of the individual Dow stocks. There's 30 Dow stocks. In fact, I've got a watch list set up in TradersPro. You kind of have to set up your own. I think you have to set up your own watch list. I don't think there's a Dow list given, but it's not a bad list to have, just because these are the 30 of the largest companies. You can sometimes get a read on market conditions by seeing how some of those stocks are moving. The Dow stocks, let me go back to the DIA chart here. They were kind of leading the way up through here. And they're typically not the leadership group. The NASDAQ is typically the leadership. And what I noticed on a lot of those Dow stocks is a lot of them looked like they were just rolling over, and they really matched what we're seeing here, where we got the impulsive move down, corrective. Again, at the very least, we should get another move down. Maybe that's just wave A, wave B, wave C of a bullish ABC pattern. Now, why did I draw it down to here? Well, typically with ABC patterns, they complete when wave C is about the same length as wave A. So if that's wave A, and whenever this correction is done, you kind of take that distance, project it down where it gives you kind of a target area. Then what I'd like to do is look at other support resistance in that area that might back that up. You got a little bit of support right here that could line up with that. You've got a support level down here. These help me give me kind of potential targets of where I think we could drop it in. And that would be more of the bullish scenario, where it's just completing a wave C and then you start a new uptrend. The problem with that outlook is that I don't think a drop by this much would create the fear. And again, I'd be looking for panic at this point to indicate a market bottom. That would not create any sort of panic that would indicate a major market bottom that would tell me that the bear market could be over. By the way, we've had a bear market pretty much all last year. I think that because we haven't seen. I think we're headed for a recession. The markets never bottom before we're in a recession, which means that typically you get into recession. Now they can bottom before the recession is done. And that happens all the time, where you see the market start to rally before the recession is over. But markets don't bottom before you're in recession. And since we're not technically in recession yet, that's another reason why I still think we have more downside. Now, could this be the one time where it does it different, where it does bottom before a recession? Yeah, that's the problem. There's always a possibility. And if you focus on possibilities, you can find every single possibility in the world, and you're gonna have trouble trading. Okay, you got to focus on the probabilities and know that the possibilities can happen, and the possibilities will cause you to get stopped out of trades, and cause you to lose money and things like that. But you have to stay focused on the probabilities, and that's what I try to do with all my analysis, and that's what served me well over the years. What is the probability? And that's what I'm doing right now with the current chart. Based on the chart, you got impulsive down, corrective. What's the probability? The probability is we should have another impulsive move down, and that's how I'm playing it. NASDAQ, we talked about the significance of this move back last week, where we closed. We had the 52-week low or closing low. Now, we did go lower in October on the open of that day, but remember, we closed up here. That is significant because, again, the NASDAQ 100 tends to be the leadership, and it's showing a leadership to the downside. It's showing that it's leading the way, possibly leading the way down. I think what you could add into this that I think is what a lot of people are talking about today, but it's important, I think, to keep an eye on, is Apple. I know it's one stock, but Apple is such a huge part. There's so many people that own Apple or are part of trading Apple that it is a significant market barometer. And I'm amazed right now that on the way up, everyone talked about how Apple, always keep an eye on Apple. Apple will tell you where the market is likely to go. And Apple, the problem with that, though, a little bit was at the end of the bull market last year, everyone was just piling into Apple. All these other stocks were lagging, but everyone was just going into Apple because it seemed to be the only safe place to go. And it wasn't showing strength of the market at that time. It was showing desperation as everyone was piling in there. But everyone was looking at Apple as being that leadership in the bull market. But then when it's leading the way down, no one wants to point that out. And I think it's significant when you go back to those October lows. Remember, the NASDAQ 100 barely closed it closed below. This is Apple's chart, but if you're looking at that October day, we had that reversal. Here's where the NASDAQ 100 is. We've closed now well below that. Look how far down Apple is from that and below that October low right here. Let me go back to the Qs chart again so you can see. Here's the QQQ chart. So we haven't gone below that October low yet. We had the closing low, but we haven't gone below that October low yet. But again, look how far Apple is below that low. So to me, if I'm going to be honest and if I'm going to hold out, look at some of these things as leadership, because they're typically a leadership. I can't only call them leadership when they're agreeing with what I'm expecting, and then ignore them when it disagrees with what I'm expecting. If you're going to say something's a leadership thing, it's got to hold some weight. And Apple has been a leadership, and it's breaking down. In fact, when it really started to sell off today was when the market really started to drop. Now, there were a few reasons why the dollar started to jump up. We'll look at the dollar here in a second, but that was partly a reason. But that is not good. If this is leading the way, then this should mean that at least the NASDAQ 100, the S&P 500, and the Russell 2000 should all end up breaking that October low. Now, maybe the Dow manages to hold up. That it's so far up away from that October low. But I could see it getting really ugly where those stocks really start selling off to catch up if there is a panic sell-off. Because remember that a lot of the traders have gone into those industrial stocks and a lot of those big Dow companies, the more stable companies, as a safety. And if they feel like they got to jump out of those, yeah, I could see where panic would kick in. but that's a bearish, real strong bearish sign right there. When you see Apple broken down like that, people are also talking about Tesla today. Tesla, although it's an important stock, it's not as big as Apple, not as influential as Apple, but there's another one that's just completely fallen apart. And this one again was the leadership on the way up in the bull market. Everyone was piling into Tesla, and now they're jumping ship. By the way, it's important to recognize too, when we have these transitions where you have these big market sell-offs and things like that, and stocks get hammered, the leadership of the previous bull market typically isn't the leadership of the new bull market. In other words, if you were to say what was the leadership of the last bull market, there is no question. It is the answer, which is the FANG stocks, right? The Apple, Microsoft, Amazon, Google, Meta, all those stocks were the quote unquote FANG stocks. That was the leadership of the bull market. There's no question about that. Tesla could even be thrown in there as one of those darlings during the bull market. When we do bottom and start to go back up again, I'm not saying these same stocks won't rally with the market, but they won't be the same darlings as they were typically. Okay, there could be some that Apple's been part of every bull market for the last 20 years almost, or coming up on 20 years. It's tended to survive some of these cycles and still been part of that leadership. But the important thing to remember, the reason why I'm saying that is if you think that when we bottom out and we're starting to go back up, that the thing to do is to go all in on these FANG stocks again, that's probably not the smart thing to do, because there's probably going to be new stocks that are going to be the new group that propels things higher. So what you want to pay attention to is what is the market talking about? And it'll happen. I mean, like I said, Jim Cramer coined the FANG stocks, and now part of the problem is that everyone's going to try to do the same thing when the market starts rallying again. But we can use the software. The software will tell you where which significant stocks are people piling their money into, and we'll be able to see it here on the software. What's the high strength rank stock that everyone's talking about that seems to have the new technology for the new whatever state we're in, and believe me, I'll be talking about it in class if I start to see some of those some of the new leadership that could come out of this. One of them I think is very fascinating that I still don't know how to gauge this is Eli Lilly. I don't know if you're familiar. I think it's Eli Lilly. Yes. Is Eli Lilly the one that has the weight loss drug that's coming out? This could be one that might be considered leadership. Now, part of the reason why I haven't really come to a strong conclusion on this one, how I feel about this one yet, is because what they're talking about, the prices they're going to be charging for this drug, it's like $1,200 a month, meaning it's a house payment for someone, and they're going to have to be on this drug for a long period of time to lose weight. Now, I'm sure there'll be people that have the money and the motivation to do that, and this could be, the way they're looking at it right now is that this drug, it could be what Viagra was to Pfizer, where Pfizer really went into this made tons of money with that Viagra. Could this be the same type of thing for this one? So I don't know. This could maybe be one of those leadership type stocks that leads the way out to when things start moving up again. Now, before you go pile into Eli Lilly, the chart is looking a little bit bearish here. Looks like a bearish head and shoulders pattern right here. Now, it really looked bearish if it broke below this low. But with a possible panic sell-off taking place, remember what I told you, when panic sell-offs, people sell no matter how good a company is or what they think of it, they tend to just get out. You could get a much better entry point if you're a little bit patient for a few weeks to see if we do get that. But this could be one that you know, could be one of those leadership things. And again, I'm not saying we're bottomed yet. That's the thing. I've talked about how I don't think we've even bottomed yet, but when the market does bottom, this could be one of those that ends up being one of those leadership groups coming back out. I do know that a lot of the biotech stocks have been looking better lately. Not enough, like I said, to where I want to start piling into them, but it is starting to look more attractive, some of the stocks within that sector. Again, there's a lot of areas I like. It's just that I just can't buy into it yet until we see the market kind of shake out a little bit here, and I'm just kind of patiently waiting for that to take place. Here's a Russell 2000 again, looking like the other indexes here. We're expecting all these to end up at or below those October lows. I would say it needs to go below those lows if we're going to get any sort of fearful selling taking place, because everyone again is looking at these October lows. There was a significant low. That was the last lowest point in the market, and if we get down to those levels, and especially if we break below those levels, that's a thing that could trigger more fearful, panicky type selling that could take place. So that's definitely an area there we want to pay attention to. Bonds. Now, I told you the last couple of weeks on bonds that we had this downtrend that we broke on this move up. This is more of an impulsive move up. We had this impulsive move down. Little bit of a sideways move last week. We're up a little bit today. The problem is, though, I don't know if this is just part of is this starting just a correction, ABC correction, or another move down? What would really be confusing is if we really start moving impulsively back up, where you've got impulsive up, impulsive down, impulsive up. That's in and of itself, that's indecision. It's just indecision over a wider range. It's kind of a sideways move over a wider range, so that's not helping too much. But we'll keep an eye on that. It is trading lower than where it opened. So again, maybe this is a B, C, a little bit of a bearish reversal candle there. Maybe that leads to the bond market continuing to move down. We'll keep an eye on that. But bonds have really moved into an area that's where it's tough to read that trend direction, where it could go either way. All right. Now, the gold has been an area here that I've been really bullish on. Now, the candle on gold is a little indecisive today. A little bit of a spinning top candle, opened higher than where it's trading right now. It could close lower than where it opened. Now, that could mean that it pulls back a little bit after that, and it would probably pull back if the market sells off. Like I said, as much as I'm bullish on gold right now, any big sell-off, it could pull back. But remember, the gold trade that I'm in right now, I have a gold mining stock that I'm in on the portfolio in the gold mining ETF. I have a wide stop on this. I'm willing to deal with some of this back and forth stuff, but I think we're going to see gold move higher, and especially if the market sells off. Like I said, initially, I think the gold could drop if there's an initial sell-off, but I think it'll start rising as a safety play as people look for areas to go into. They're getting out of stocks. Where they're going to put their money? Well, they could put it into bonds. We could see the bond market rally off of that. It could also go into gold, and I think it will. I think with that combined with the high inflation right now, we really didn't see gold rally much last year off of the big inflation readings we had. And you can see it on the long-term chart. You can see how we broke that downtrend. right through here. And, we're starting to, now again, could we have a correction somewhere in here? Yeah, and that's why I've got wide stops on this. I'm allowing for pullbacks and consolidations and things like that. But ultimately, I think we're going to be trending up in gold, and I think that's an area that if you're looking to put some money to work, is probably a good area to be in. It just have to be patient with it, because it can whipsaw a little bit, and probably will, as we've seen just over the last few weeks. It's kind of whipsawed as it continues to move higher, but it's kind of whipsawing its way as it moves higher. Oil's finally starting to move down here. Remember, this goes back a couple weeks. I was looking at this bearish day right here, which it was actually a bearish engulfing candle until the very end of the trading day, where it moved up. This was looking like a bearish ABC pattern right here, and I was near term bearish on oil, and had impulsive down. I was expecting this to drop. It managed to fight its way a little bit higher. Obviously now it could still be a bearish ABC pattern, but that's a pretty deep retracement. Any move above here would be more bullish for oil, because that was the previous lower high. We got lower high, lower low. Again, it dropped to, again right here, like it looked like it was starting to drop right here. It fought again on Friday. It's tried to move higher again, couldn't get above that high, and then today we're down again. And we're at the lows of the day. We'll see if this leads to a bigger move down. I'm still leaning more bearish on oil, because even with the fact that it's fought to go higher, this is still very choppy, very corrective looking. So this is clearly impulsive. This is clearly corrective, although that's a very deep retracement. You have to acknowledge at that point that the probability at this point is that the likelihood of it dropping is diminishing that when you have this deep of a retracement up right here. So I'm acknowledging that. I'm not feeling overly confident that oil is going to drop lower from here. We'll have to see how the next couple trading days, if we see more of an impulsive move down through here, that might change my mind. And definitely if we rally back up and get above this high, I'd have to turn a little bit more bullish on oil at that point. So that's kind of my outlook with oil. We'll see, and that could be tied into how the dollar trades as well. Although oil's down, you've got the proper inverse relationship. The dollar is up, oil's down, and this could be a little reason why gold is showing that little bit of a bearish candle when the dollar started to rally. Again, you're not always going to have this correlation. It's not a perfect correlation, but typically the dollar and commodities are going to move in the opposite direction. By the way, gold is not the only area you could look at. You can look at silver as well. If you're more into silver, silver is a little bit cheaper. If you're looking to trade the SLV versus the GLD, the gold and silver ETFs, the silver ETFs is a little bit cheaper. If you wanted to go that route, that should have the same movement as gold, and in some cases it may outperform gold. But the dollar, now I don't know what to make of the dollar move yet. There's a couple things I do want to point out. You have this declining trend line right through here. With today's move, we broke above that. We also had, this was a lower high right here. We did go to a lower low on Friday. Now we have a little bit of a higher high right here. Despite how we closed today, the price action moved to a higher high. Now, could this be a reversal back up in the dollar? We don't know yet. It could just be starting an ABC correction. This could be A, B, C, and then we continue to drop. It could be just a bigger corrective move that takes place, kind of like what happened right through here. We had a little bit of a rally, but it still led to another move down. But it is important to pay attention. That is a significant move today that we broke that trend line. So there's a little bit of a bullish technical move today, and we went to a higher high right there. So we'll keep an eye on that. We'll see if the dollar continues to move high. Now, the market doesn't always move inversely to the dollar, but it has been for the last couple months. And so that is something we'll pay attention to. Could this be one of those triggers for a sell-off if the dollar suddenly starts to rally strongly? Could that be a reason why stocks start selling off a little bit more as well? Could be. We'll see. The VIX. Let me go over here to the VIX, my VIX indicator. You can see VIX is off the highs of the day, right about where we opened, but it is up from Friday. It is elevated a little bit. It was elevated right in the morning. That's one of the reasons why I didn't trust the initial rally early when the market opened, because you had the VIX up pretty noticeably. So the market was up, and then the VIX was up pretty noticeably, and that told me that there was a little bit of concern right off the bat. Some of those traders were buying some of those protected puts. Now, remember back here, what I said didn't make a lot of sense. We were seeing days where the market was down and the VIX was down. And one of the theories I gave you at the end of the last month in December was I felt like some of the professional traders were trying to hold off buying those protected puts, spending that money on those protected puts, trying to see if they could get through the end of the year without having to spend that money on that protection. Probably betting on the fact that we haven't had many panic sell-offs in December, and particularly not many panic sell-offs during the week between Christmas and New Year's. So that was my theory. Again, I don't know if I'm right on that or not, and it doesn't really matter that much, but when I see trading open today and the market opens higher and the VIX makes a jump up, what does that tell me based off of that theory? It tells me, okay, we're in a new year, a new month. These traders are, if they're, the way they've been acting, they're expecting the market to go lower because that's showing up in the price action on the chart. So we just went through. Could they now be starting to buy those protected puts, expecting this drop that who knows, it could happen soon? I think it's going to happen soon. Keep an eye on that. Let's see if we start to see the VIX start inching its way higher here. Now, remember, 30 this is the fear level. We're not even at the fear level yet. And so remember that sell-off we had early in December. That didn't even get us. Well, I guess got us a little bit more than halfway to that 30 area, but it wasn't even near fearful selling. So, in other words, if we go back to the SPY chart right here, that is not showing. There was no fear in that selling. So if there was no fear in that selling and now we're consolidating, this should be where we start to see fear. And then I think if we break below here, that's where we start to see panic. Now remember, panic is going to be a VIX that's above 40. And again, I'm doing this for some people that are brand new and they're just joining. I know usually in these New Year's, we get a lot of new people that come in right in kind of that New Year's resolution. I'm going to learn how to trade. So we get an influx of new traders coming in. Here's 40 up here, and you can see that nowhere, all the selling that took place last year, we never got above 40. And 40 is a minimum. Usually on a major market bottom, you're up 45, 50. You're clearly above 40. We didn't even get to 40. So you can't make the argument that we had a panic sell-off last year. There's no way. And I've been through a number of panic sell-offs, so I know exactly what they feel like. And none of these sell-offs were panicky. Now, again, this is what I keep coming back to as well as a reason why, where is the market going to rally? We're so close to 20. 20 is where we've seen the market sell off. Anytime it gets down to 20 or a little bit below 20, we've seen these market sell-offs take place. We had that big drop, and we're still right back down to close to 20 here. This is really what has been guiding me in this outlook. Anytime the market starts to rally, and I think, oh, maybe it could turn here. Maybe I'm wrong. I come back to sentiment, and sentiment is there's just no fear yet And I don't think the market can rally significantly until there's a lot more fear in the market. And that's why a lot of times when you get up to about 30 or above 30, we've seen the market then rally because there's enough fear there, enough of a drop where professional traders at least like to get in at that moment. So I can't tell you day to day right now which direction we're moving in, but it really does look like within these next couple of weeks we should see a significant downturn. By the way, if you're trying to pull up the actual VIX indicator, like I said, on TradersPro, it only pulls up tickers that you can trade. Actually trade. You can't trade the actual VIX. You can trade an ETF that tracks the VIX. The VIXY is one of those. The problem, though, is that the numbers here don't line up with those numbers I talked about. So you could use this to see if you see the VIX is moving up. But if you want to look at, is the VIX at 30 yet or 40 or 20, some of these key levels, you might have to pull that up on another. And there's free charting services out there that you can just pull it up on. I talk about stockcharts.com as one. The only thing with stockcharts.com is you have to put a $sign in front of the VIX. When you type in the ticker symbol, just put in a $sign VIX, and it'll give you a chart of the VIX, like I just showed you there. That the charting service I pulled that up on is TradingView. I use this for because I do other types of analysis. A lot of short-term trades with option trades and stuff. I'll use moving averages and some of this other stuff that I'll use. But this is a paid service. I'm not necessarily telling people to go use this. I don't have any affiliation with them except for just using the software. But people ask me all the time what I use, and so that's what I use. But like I said, there's no need if you're just going to be pulling up a VIX indicator. Like I said, there's a lot of these free platforms, at least free versions. A lot of times they'll have a free version that has ads that pop up everywhere. It can be kind of annoying. But if all you're using it for is just to see what the VIX is looking at, then I'd say no need to spend extra money on another service to just look at that. But that's something you'll see me talk about a lot. I look at this a lot. And what I'm gauging here is I'm gauging what the professional traders are thinking. Are they fearful? Are they confident? And it's not telling me something every single day. But when it does, I want to pay attention. Today, I think I'm paying attention because of the fact that of the way it opened. Like I said, the market opened up. Usually you're going to see an inverse relationship. The VIX should have been down with the market opening higher today, but it was up. That tells me there was some concern. Although we were rallying, there was concern with the rally, or there was a lack of trust in the rally. And those professional traders were buying some of those protective puts to deal with that. All right. Chip stocks, again, you're getting a pretty strong bearish reversal candle. This tends to be leadership, although they were starting to rally pretty well through here. Now we're starting to see them fall apart a little bit more. Bearish reversal candle there, looking like chip stocks should move lower. Transports, again, some of these, they're not always telling me anything different, so I'll skip over them if they're not really showing anything significant. Bitcoin right now has just been moving sideways for the most part. Although I think it will have another move down eventually. It's just kind of consolidating right now. All right, let me jump over the portfolio here. I did add in over the weekend, I just kept my gold stocks. I had the one inverse ETS, the SPXS. So I have a gold mining stock on NEM. I like this stock. The chart pattern on this, it was breaking out, and it looks like it's still holding that breakout right there. That's looking pretty bullish. I back out, you can see the kind of the bowl-shaped pattern it's starting to make here. So you come down, you hit the low down here now. It looks like you're getting higher lows, higher highs are starting to break out right here. I've got my stop all the way down here. So even if we get a market sell up and let's say we come down into this area right here, I still want to stay in this thing. I'm willing to risk that amount. kind of stay in the thing. So this is a little bit of a longer term play I'm in. I also have if you don't want to pick an individual gold mining stock, I also have exposure to the ETF for the gold mining stocks, the GDX. And you can see the bowl-shaped move on that one as well, a little bit more distinct than on NEM. And by the way, if you're wondering why I picked NEM over some other ones, a lot of it had to do with I've traded NEM a lot over the years when I've traded gold. I've tended to trust that gold mining company a little bit more. That's, are there other ones that have a higher strength rank? Yeah, and if you're going to go off of the pure strength rank, that would probably be the way to go. It's more familiarity for me. It's the chart looks good, the sector looks good, and it's one of the ones like I said, I've traded a lot in the past that have a little bit more confidence in. So, but the GDX is you can trade the whole group, and that way you're not worried about picking the individual one. But this looks good so far. Had a nice jump today. I also stayed in over the weekend the SPXS in case we drop today significantly. I wanted to have some. This is an inverse ETF for the S&P 500. If the S&P 500 goes down, this will go up. Now, what this allows you to do is it allows you to still be long the market, but be able to make money when the market goes down. I don't like to short stocks, shorting stocks. I don't like the risk involved with shorting. Now, it doesn't mean I don't trade the market down. I usually will trade it down with using put options, or if I'm doing it more from a trend standpoint, I'll use these inverse ETFs. Now, I'm not usually looking to be in these for a long period of time. What I do is I'll ride, if the market drops, I'll ride that drop with these. These should go up when the market drops. And then if it looks like the market will start to rally or you start to get bullish candles showing up, I'll jump out of these again. All I'm trying to do with these is see if I can make a little bit of money on these drops. I'm not looking to make a killing necessarily. And again, this is a kind of a unique thing that I'm doing. A lot of what I'm doing right now with the software is just unique to the conditions. And in bear markets, the safest place to be is in cash. But I can't do a class if all we're doing is saying stay in cash, we're not doing anything. We're just going to sit here. It gets boring after a while, and you want if somebody wants something to do during a bear market. And so what I'm trying to do right now is give you some things that you could consider. Again, we're still trying to preserve capital, which is why you can see that I have barely any of my portfolio. I shouldn't say barely, a small portion of my portfolio in the market, but even then it's mixed. I've got long positions. I've got, gold trades I expect to go up. And then I got these trades that'll, if the market goes down, they'll go up. And so what can happen there is you can get a little bit of a wash where you're making money on one end, but you're losing it on the other. And that's okay. Again, if I could just grind out a little bit of a gain without having too much risk exposure, that's the whole idea here. And then what I added today was a couple other inverse ETFs I like. The SOXS is the opposite of the chip stocks. I showed you how the chip stocks looked pretty bearish. This had a little bit of a bullish reversal candle today. Just put my stop down here, I think at like 36, just below this low. If we don't go higher off of this bullish reversal candle, I'll jump right back out of this thing. As that means the market could be rallying a little bit. I might do that, jump in and out with some of these things, mostly because if they start to go against me, I don't want to lose any significant amount of money in these conditions. So, but I felt like things were turning a little bit more bearish today. Now the Dow's rallying. It looks like the market's off the lows. We'll see how that, like I said, we'll see how things end up closing here. And then the SARK. Now this one had a dividend payout. That's why it had this big gap down right here. So anyway, I got in today with this little bullish reversal candle right at the support area right here. I got my stop just down below here. We'll see if this thing can rally back up. This is the opposite of the ARK Innovation Fund, the ARKK, Kathy Wood's fund, which has been terrible. So when that one goes down, this one goes up. This has made us some money over the last year as well, whenever the market seems to drop. Now, again, like I've been at about 138,000 up to, I was actually at 142. It's backed off a little bit today, back and forth. I'm just trying to grind some gains here. Not expecting big returns, but like I said, we were in the 130s a couple months ago. We're in the 140s now. I'm more than happy with that. Just even if it's just kind of back and forth in that range, I'm not too concerned about that. And like I said, it'll test your patience. If you're wanting to make a killing in the market right now, the market will pay you when it wants to pay you, and if you try to force it to pay you when you want to get paid, that's when you run into problems. You make a lot of mistakes. Now, if you know how to trade options and you know how to trade put options, that could be a way that you could make some decent money when the market drops. But if you don't want to get into option trading, you want to stick to long positions and you want to stick to kind of that longer term time frame, the key right now is just to be patient. And that's why I'm not going to go into any individual stocks today, other than what you can consider the ones I'm holding in the portfolio right now, the inverse ETFs and gold miners. And we'll see if on Thursday there's something else to consider at that point. But I don't think we're going to get a sell-off I'm expecting. I don't think it's going to happen in 2 days. I think it'll happen over several days. And so we might still be kind of in that wait and see phase until that we start to see a little bit more of that damage. All right, that's all I have. So bottom line, again, in fact, let's pull up the SPY as we wrap things up. What am I looking at today? Really, I'd like to see us, if we're really bearish, I'd like to see us close below Friday's low, get outside of that price range. Now, what happens if we rally up and we end up closing above the top of that range? Would that be really bullish? Not necessarily because of the way we open. If we still end up closing lower than where we opened at the end of today, that's a bearish price action. But like I said, there's still some room that we could rally up a little bit further. We had a bullish candle right here on Thursday, and the market didn't really go up off of that bullish candle. We had a bearish candle on Wednesday. We didn't really go down off of that. So just because we have a bearish candle looking today doesn't mean, hasn't been anything lately. There hasn't been any follow through. And so, I don't want to start drawing any strong conclusion yet until I see a significant day. And like I said, who knows? Maybe we see that today. If it really surge into the close and close lower, VIX spikes back up again going into the close, maybe that'll be a clue for tomorrow. But if we're at right now, tomorrow's a coin flip. We'll just have to wait and see how things start to trade tomorrow. All right, thanks everyone. Have a good rest of your day. We'll see you on Thursday for the stock specific class. And if you have any, again, questions during the week or any other questions, send those to Jerry@TradersPro.com. Bye, everyone.